It's very interesting that when you look at the price, currently there are 8 banks, 8, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market. Why? Why would 8 banks be stepping on the price of silver that much? Or the LBMA, who tells us they trade 290 million ounces of silver per day, but say that those numbers are 10% understated, 10 times understated from what is actually traded, just the settlement numbers. But the trading is 10 times greater. That would say 2.9 billion ounces of silver is traded in London per day. That's 3.5 times annual global mine supply. Now, the LBMA says they're very low on silver. They have 800 million ounces, period, of which over 500 million belong to the ETFs, leaving 300 million ounces there, yet they're trading close to 3 billion ounces per day. So between the 8 banks on COMEX, which control the largest concentrated short position in any commodity ever traded, or the LBMA, which is trading up to 3.5 times annual global mine supply every day, should tell you that the real price for silver is, well, heck, no one knows what it is. And when you see central banks like India, who in the last 2.5, 3 years has bought over 700 million ounces of silver, and already here in 2024 bought more silver than they did all of 2023 in the first 4 months of the year, and now bought a whole bunch of silver recently, billions of dollars worth, from the United Arab Emirates because they have some deal in trade with them where they don't have to pay as big of an import duty. Silver is something that is a strategic asset, not an industrial, as all of us want or are told should be. But as far as I'm concerned, it is the drawdown and the accumulation by the biggest money in the world. I want to read something to you because when we talk about the supply-demand fundamentals, the Silver Institute publishes numbers, and those numbers have showed a 250 million ounce or so shortfall in between supply and demand over the last few years each year. And so, in other words, there's more demanded than is coming to market. And when you look at the supply-demand numbers out of the Silver Institute, what they say is the demand is industrial, electric and electronics, of which photovoltaics, that's solar panels, other industrial, photography, jewelry, silverware, and that's it. My point to you is this. In 1942, we were on the verge of using 200 million ounces of silver per year, and for military applications. And now we're supposed to believe that with all the high-tech weaponry, that there's no silver in it. The Silver Institute omits completely and totally military demand. So we have a situation where, ask yourself, why would 8 Western commercial banks suppress the price the way that they do? The largest suppression, the largest concentrated short position in any commodity traded is in silver. The largest. Silver, we are told, is used in military, but they conveniently stopped talking about that and stripped it out of the supply-demand fundamentals. The military-industrial complex is pretty damn powerful, maybe more powerful than the present, probably so, probably pulling the strings, the people up there. Do you think they want silver to build all of the missiles that they are selling all around the world and or to the US or to the rest of the world? Do you think they need it? And if silver were really known to be so integral to military applications, do you think it would be as cheap as it is? Do you think there's any coincidence that India has bought, literally going on, if you add what they bought from United Arab Emirates and what they bought from the West, from what they told us, you're getting close to 1 billion ounces of silver in the last 3 or 4 years. China is the largest producer of silver. You don't ever hear them talking about it, but they are, number 2. Mexico's number 1, China number 2. Silver is the trade of a generation. It is the value of a generation. And if it weren't for these Western banks that are holding down the price, it would go parabolic. Now, what's different? What is different right now is that you, for the very first time, have sophisticated, coordinated, and wealthy governments acting maybe through by proxy through sovereign wealth funds and bullion banks that are draining the exchanges of the LBMA and the COMEX and backdooring out of the ETFs and even the Shanghai Metals Exchange. And they are loading up on gold and silver. But in terms of silver, this is how they win. They look at the brain-dead suppression of the West to achieve an illusion that silver is cheap so they can continue to fund the beast of the military-industrial complex and the hundreds and hundreds and hundreds of wars that we've been involved in, or they have been involved in terms of supplying munitions for the last several years. It's the key to it all. Why would it be omitted? Why don't they talk about it? Why are these banks as dumb as a mud wall in a rainstorm suppressing silver at a time when all of these other governments are buying it? What is different now than in all of my career is that over the last few years, you have countries and sovereign wealth funds standing for delivery. They never did that before. 1% or less stood for delivery. Now they all do. This is how they win. Thank you very much. I don't care about positive real yield. I don't care about the strong dollar. I don't care about any of these relationships. Just give me the silver. And if you look at the drawdown in the LBMA silver vault, it's like a ski hill straight down, right? And the same thing is true, only slower on COMEX, and the same thing is true right now on the Shanghai Metals Exchange. So these countries are buying Western gold and silver, having it delivered to China, and offloading it off of the exchanges. There is a contract that most people don't know about that was written by the CME Group in 2015 that allows for COMEX futures to be delivered in exchange for physical to Brinks, Hong Kong, which is a COMEX facility, where then that stuff is picked up by a truck and driven to the Shanghai Metals Exchange, where it's offloaded to all of the countries that are buying and taking delivery of metals, including the PBOC. Silver is the value of a generation. You have to have strong fingertips. But this Western suppression, which has been going on for a long time, never had these countries coordinated, sophisticated, wealthy enough, cunning enough to stand for delivery. But they are, and it is the Achilles heel. It's one of these deals where we will wake up one day. If gold continues, if gold gets above 2,500 and climbing, you'll see silver bangs take off. They can't continue to hold it down. And I think this is just the very beginning. So it's the value of a generation. I mean that in my soul. There are very few assets that are depleting in nature. Keith Neumeyer will tell you it's coming out of the ground at 7-1. After 5,000 years of it coming out of the ground at 16-1, because it's held in nature in a form called epithermal, like your skin is epidermis, epithermal right at the surface. Big deposits were gone long time ago. So it's needed in military, in green, in digital, in electronics, and it's experienced a monetary renaissance. And yet we're supposed to believe that it's coming out of the ground at 7-1, but it should be valued at 80-1. So God's ratio says 7-1, man's price in the West says 80-1. And I would simply say this. There was a statement made by the head of the Shanghai Gold Exchange in 2014, and I'll throw silver into this equation too. He said, when China is allowed to speak at the table, the real value and the real price of gold will be revealed. Well, the same thing will be true about silver, and Zoltan Pozsar will go down as one of the smartest people ever, who told us all we are now entering Bretton Woods 3, a system about who's got the commodities. And so these countries that are gobbling everything up, well, they're using the suppression that we've been fostering forever against us, where 8 stupid banks can hold the price down of a commodity that is massively acquired and needed, distorting its real value forever, as dumb as a mud wall. Why? Well, there's your why. Because it's needed to fight wars and build high-tech weaponry. So yeah, the most undervalued, underappreciated, best value of anything I've ever seen in 35 years of finance. I think that solar power is kind of a ruse in the respect of what they're trying to tell us all the silver demand is coming from. I mean, look, if you look at the demand numbers, industrial 9%, electronic and electrical 9%, brazing alloys and solders 3%, other industrial 9%, jewelry 4%, silverware 7%, and photovoltaics, which are the panels, 20%. They're telling you it's by twice the biggest demand center for silver. In China, we just saw a 5 gigawatt solar power plant come into commercial operation. It's the biggest in the world. So there is some demand certainly for it, and it's real. But I think in essence, the real demand for silver is in high-tech aerospace, submarines, and high-tech weapons. If 500 ounces or a mint box of Silver Eagles in the tip of a Tomahawk cruise missile, how many have we fired in the past few years? How many have all of these countries in wars fired? How do you make them without it? So I think cratering a demand for silver ain't going to happen, because it's disappearing in nature. It went from 16-1 to now 7-1. It's disappearing because all of the large, so much so that only 25 to 30% of all the silver mined last year came from companies like Heath Newmeyer's who mine silver, like First Majestic. That's 25 to 30% of 100%. So that means 75% came from other places. Why would that be? The majority comes from byproduct mining companies who are never looking for silver and just stumble across it as they're mining some other metal, some other asset. So it's so hard to find that there's only a handful of real silver companies because it's so hard to find. And so, no, I honestly, Jesse, I think that while it's a valid question, I think it's misdirection. And yeah, solar panels are real, and it does take certainly a certain amount of silver to do this. These new panels take twice the amount as the old ones. But yeah, I don't know to what degree solar will be powering the major cities, other than to say, you have the biggest one in the world that just went operational, taking over as the world's largest operating photovoltaic facility. So there is some truth in it, but to believe that is by a factor of 2, double, that's the largest demand source for silver. No, that's not. I don't believe that is. But I also don't think it will crater it. I just think there are too many uses for silver that are growing by the day that we're not really privy to. And so, no, I think it's the value of a generation. For the last 6 months, the lack of Western participation has been shocking. The drawdowns in the ETFs, even though some of that would be delivering metal, taking delivery out of the ETFs for the authorized participants. But the drawdowns in the ETFs, the lack of investor demand in the West has been startling. And albeit it represents a very large proportion of those sales that we do. Now, don't get me wrong. Last year was our biggest year by far. You take that out of the equation, we're still on pace to do better than every year except last year. And 2022, 2021, 2020 were huge years. It's not completely, totally been abandoned. And almost, every single order we do has some capacity, has silver in it. But it's nowhere near the allocation it should be. Rick Rule talks about it all the time. If you take the entire financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund, that allocation is less than 0.5%. So yes, it's very small, but I will tell you that if something happens, a bank problem, commercial real estate leading to bank bail-ins, which most people don't even know was written into law in the Dodd-Frank Act, because Silicon and Signature were bailed out illegally, as the subcommittee hearing with Janet Yellen and the Oklahoma senator paid homage to. But, people don't know that if a bank fails, a big one, it won't be bailed out anymore. It will be bailed in. The amount of fear that would create. We added 14,000 clients in 45 days when Silicon Valley Bank and Signature Bank failed, and they were illegally bailed out. Evidently, it was an uber majority vote between the FOMC, the FDIC, Janet Yellen, and the president because they were too systemic. But when asked, would this happen again, Janet said, not unless that same thing happens, where it's a majority uber vote by all of those parties involved. Otherwise, they will be bailed in. The other banks that have failed have been gobbled up, consolidated with JP Morgan and others. That won't go on forever. And you see a big bank fail and is bailed in, where everything over FDIC goes to bail in the bank. In other words, 250,000 or 500 if you're a couple, it's gone. And goes to bail in the bank. The amount of fear that would create, like that, you would see a rush into precious metals that would bankrupt the availability of supply within 24 hours. It's a very much a just-in-time business. You can stock up as much as you want, but there is a cost for buying large amounts of inventory, holding it, financing it if you don't have the cash, and even if you do, the cost of carry of that sitting in your warehouse, and then you have to hedge it, and all of the things involved with risk and risk mediation. And then you talk about the high premiums that we've seen over the last several years that you can't hedge that. Premiums have come down a lot now. You can hedge the metal content, but not the premium. And those have come down to where prices are very attractive. It will go down to me both as, a mystery why people don't see what we talk about. Maybe it's because they can't get out of the way of what they never see coming because the media doesn't talk about it. You got to go to alternative sources like you and me to find this information. But I will also say it's probably the biggest contrarian indicator of my life. At the same time, the most well-funded and more relevant, the most well-informed traders in the world, the central banks and sovereign wealth funds, are buying hand over fist. The American public has their thumb in their rear buying Apple and Nvidia and Bitcoin. Not saying there's anything wrong with those things, but what I'm saying is instant gratification is not fast enough for the American public. This is too boring for them. It's too volatile. It's too counterintuitive. You better understand what you're doing to take a position in gold and silver. And if you do, it becomes very obvious that over time, gold and silver will assert themselves in a way that most people will be shocked when it finally happens. It's easy to dismiss a market that is counterintuitive and does not move in any speed, if you will, but I think that will be a big mistake. The underestimation of how important silver and gold are and how important they are to people's portfolios will be a very big mistake for those who never realized it. So yeah, again, just beginning, Jesse, and I think things will start to accelerate as we are getting later in the hour in this Keynesian system and this dollar-based debt system, which I believe is getting very late in the game. You'll start to see this become more evident, and certainly gold leading the way here, busting through all-time highs again at 2470 almost as we speak. It bodes very well for silver's future performance.